Good morning, May 12th, 2026. Here's what's happening right now. Crude oil is surging more than 3%, gold is fading, Bitcoin is rolling over, and stock futures are starting the day lower. The driver is simple. The US-Iran ceasefire is back on life support, and the market is pricing another inflation shock right into CPI day. In this video, I'll walk you through what changed overnight, where every major market is trading right now, and the three setups that matter most going into the open. Here's the main story. Over the weekend, the US-Iran ceasefire collapsed into what Reuters this morning is calling a deal on life support. Per Reuters, President Trump is now actively considering resuming military action after Iran's latest peace proposal was internally described as garbage by US officials. No major decision is expected before the Trump-Xi summit, but the threat alone has been enough to send energy markets straight up. Look at crude oil. Price is pushing sharply higher overnight, $101 a barrel, up 3.3% in a single session. On the chart, this is a textbook breakaway gap out of the consolidation we've been watching for 2 weeks. Breakaway gaps in Edwards and Meiji terms are highly reliable. They typically don't fill, and they mark the start of a new leg higher. The operative level is $100. That's the round number resistance that just flipped to support. If crude holds above 100 into the close on volume, this is a highly reliable continuation signal toward 106 as the next resistance. A return back below 100 today would invalidate the gap and turn it into a bull trap. That's the scenario the bears want to see. The second piece of the energy story, Reuters also reported that Iran's IRGC is now defining the Strait of Hormuz as a far larger zone than international law recognizes. That matters because Hormuz carries roughly 20% of global oil flow, and a wider definition gives Iran a legal pretext to interdict tankers further out. Now watch gold. This is the surprising move of the morning. With a war story this hot, you'd expect gold to be ripping. Instead, it's pulling back, $47.13 an ounce, down 1/3%. The chart shows a rising wedge going back about 6 weeks, converging trend lines with an upward slope. Wedges in Edwards and Meiji usually break against the slope, so the bias here is bearish. The operative level is 46.50. Lose that, and the wedge breakdown confirms. Moderately reliable as a pattern. If it confirms on volume, the measured move targets 4,500. MyRid, gold is telling you the market is focused on rates, not fear. Higher oil keeps inflation hot, which keeps rates elevated, which pushes gold lower. And that brings us to the main event today. The April CPI report drops at 8:30 Eastern. Per Reuters, headline CPI is expected at 3.7% year over year, up sharply from 3.3. Core is seen at 2.7 versus 2.6 prior. If we get a hot print on top of this oil move, the inflation story locks in for the summer. One more data point worth noting. Indian shares overnight posted their worst drop in 6 weeks per Reuters, with $115 billion in market cap wiped out as Middle East hopes faded. The global ripple is all. Here's where every major market is trading right now. S&P futures, 74.05, drifting lower, down 0.4%. Price is probing the rising trend line from late April. The third touch. Holds here, the uptrend stays intact. Nasdaq futures, 29,150, leading the downside, off nearly 1%. A clean break below yesterday's range, the weakest of the big four this morning. Dow futures, 49,756, holding basically flat. Defensive sectors keeping the index quiet while tech rolls over. Russell, 2868, down 0.4. still inside the multi-week rectangle. Range trades until it doesn't. Gold, 47.13, down a third. Rising wedge under pressure, as we just walked through. Bitcoin, 80,800, down more than 1%, testing the 80,000 horizontal support for the third time this month. Dollar index, 98.29, up 1/3%, holding above last week's breakout. And crude oil, $101 a barrel, up 3.3, the day's biggest mover by a mile. So overall, tech and small caps under pressure, oil ripping, gold and Bitcoin both fading on rates. The single number to watch before the bell, S&P futures holding. 3 setups I'm watching today. First, the S&P futures. Look at this chart. What we have is a descending triangle forming across the past 9 sessions. Flat support around 7,400, lower highs overhead. Descending triangles in Edwards and Meiji carry a bearish bias. The flat support usually gives way before the falling resistance. The operative level is 7,400. A daily close below on volume, especially if CPI runs hot at 8:30. That's a moderately reliable breakdown with a measured move towards 7,300. Hold the level and the pattern stays intact while we coil tighter into the rest of the week. What surprised me, the index is showing this much weakness without even getting the CPI print yet. That tells you positioning is already nervous. Second, crude oil, the day's main story. We already walked the breakaway gap above 100. The setup for today is simple. Does 100 hold as the new floor? A daily close above 100 on continued volume confirms the gap and projects toward 106 as next resistance. That's the highly reliable continuation red. If oil rolls back below 100 intraday and closes there, the gap starts to fill and the bull trap unwind targets $96 a barrel. Trade it both ways depending on the close. And remember, headline risk on this name is enormous. One Trump Truth Social post can move it 3% in either direction. Third, Bitcoin. Per CoinDesk, Michael Burry made the rounds yesterday warning about a stock crash, and Bitcoin briefly tagged 82,000 on the news flow. Now look at the chart. Price has pulled back to 80,000 Ds, which is the horizontal support level that's already held twice in the past 4 weeks. This is a third test, and per Edwards and Meiji, the more often a level is tested, the weaker it tends to become. Hold 80,000 on volume, and the bulls get a moderately reliable bounce setup back toward 85. Lose 80,000 with conviction, and the next major support doesn't show up until 76. Low reliability as a long until we actually see the hold confirmed. Watch for whipsaws around the CPI print. Also worth noting, Cointelegraph reported Mara Holdings sold $1.5 billion of Bitcoin as it pivots toward AI infrastructure. Big miners de-risking is a structural headwind to. So here's the takeaway. Oil is surging on the Iran ceasefire breakdown. Gold is fading because the market sees rates staying higher for longer, and stocks are under pressure into CPI. Today's print will tell us whether this inflation shock is now fully baked in. See you all tomorrow at the same time. This is not financial advice. For education purposes,